How to Invest for Beginners. A complete guide to wealth. If you're new to investing, it can feel overwhelming. The stock market, real estate, bonds, mutual funds. There's so much to learn and so many options, it's easy to get lost. But here's the thing. Investing is one of the best ways to build wealth over time. Whether you want to retire early, buy your dream home, or just have financial security, learning how to invest is key. The good news is, you don't have to be a financial expert to start. In this video, we're going to break down everything you need to know about investing as a beginner, step by step, so you can start building wealth today. Let's go. 10. Start with understanding the basics. Before you even think about where to invest, it's important to get a good grasp of the basics. Investing simply means putting your money into something that has the potential to grow in value over time. This could be stocks, bonds, real estate, or even your own business. Understanding the concept of risk is also essential. Every investment carries some level of risk, but higher risk usually comes with higher reward. It's important to know that there's no one-size-fits-all strategy. Your personal goals, time horizon, and risk tolerance will determine the best path for you. A good way to get started is by reading some basic investment books or blogs, listening to podcasts, or watching YouTube videos, just like this one. The more you understand the fundamental concepts of investing, the more confident and capable you'll feel when making decisions. 9. Set clear financial goals. The next step in your investment journey is to set clear financial goals. Are you saving for retirement, a big purchase, or just looking to grow your wealth over time? Having a clear target will help you figure out the best way to invest. For example, if you're saving for retirement, you'll probably want to take a long-term approach with investments that provide steady growth, like stocks or bonds. If you're saving for a big purchase in a few years, you might want to consider more conservative investments with less risk. Once you know what you're saving for, you'll be able to determine how much risk you're willing to take, and that will guide your investment choices. 8. Build an emergency fund. First, before you start investing, it's wise to have an emergency fund. This is money set aside to cover unexpected expenses like medical bills, car repairs, or job loss. Experts recommend having 3 to 6 months' worth of living expenses in a liquid savings account. This way, you're not forced to sell investments at a loss if something unexpected happens. Having an emergency fund will give you peace of mind, knowing that you won't have to dip into your investments when life throws a curveball. Once that's in place, you'll be in a better position to start investing with confidence. 7. Decide how much you can invest. One of the most important things to keep in mind when investing is how much you can comfortably invest. This doesn't mean putting your entire paycheck into investments. Rather, decide on a specific amount of money you can afford to invest on a regular basis without sacrificing your day-to-day needs. As a beginner, it's often a good idea to start small. Many brokerage platforms allow you to start investing with as little as $50 or $100, which makes it accessible for almost everyone. The key is consistency. Even small, regular contributions to your investments will grow over time thanks to the power of compound interest. 6. Choose an investment account. Once you know how much you want to invest, the next step is to choose an investment account. There are 2 main types of accounts to consider: taxable accounts and tax-advantaged accounts like IRAs, individual retirement accounts, or 401ks. Taxable accounts give you the flexibility to withdraw your money at any time, but you'll have to pay taxes on any gains. On the other hand, retirement accounts like IRAs or 401ks come with tax benefits, meaning you won't pay taxes on your gains until you withdraw the money. And sometimes you can contribute pre-tax dollars, reducing your tax bill. Which account you choose depends on your goals. If you're saving for retirement, a tax-advantaged account might be the best choice. If you need more flexibility, a taxable account may be better. 5. Understand different types of investments. Now that you have your account set up, it's time to decide where to put your money. There are a few key types of investments to be aware of. 1. Stocks. These represent ownership in a company. If the company does well, the value of your stock goes up. But if the company struggles, the value of your stock may go down. Stocks offer high growth potential, but they can be risky, especially in the short term. 2. Bonds. These are essentially loans you make to companies or governments. In exchange, they pay you interest over a set period. Bonds are generally considered safer than stocks, but they offer lower returns. 3. Mutual funds and ETFs. These are pools of investments that you can buy into. Mutual funds are managed by professionals, while ETFs, exchange-traded funds, are like mutual funds, but trade like stocks on the stock exchange. Both options provide diversification, meaning your money is spread across multiple stocks or bonds, reducing risk. 4. Real estate. Investing in property can also be a great way to build wealth. Real estate can provide rental income and increase in value over time. However, it often requires more capital and involvement than stocks or bonds. 4. Diversify your portfolio. One of the most important principles of investing is diversification. Diversification means spreading your investments across different types of assets to reduce risk. The idea is that if one investment loses value, others might perform better, balancing out the overall risk. For example, if you put all your money into one stock and that company goes under, you could lose everything. But if you spread your investments across several stocks, bonds, and even real estate, your overall risk is much lower. Most experts recommend having a mix of stocks, bonds, and other assets based on your age, risk tolerance, and financial goals. 3. Invest for the long term. One of the keys to successful investing is patience. The best investors are those who focus on the long term, rather than trying to make a quick buck. The stock market, for example, has its ups and downs, but over time, it tends to increase in value. By holding your investments for the long term, you can ride out short-term fluctuations and benefit from long-term growth. This is especially true if you're investing for retirement. The earlier you start, the more time your money has to grow through the power of compounding. Even if you can't afford to invest a lot right now, starting early and staying consistent will pay off in the long run. 2. Automate your investments. One of the easiest ways to make investing a habit is to automate the process. Many platforms, such as Robinhood, Vanguard, and Betterment, allow you to set up automatic transfers from your bank account to your investment account. By automating your investments, you take the decision-making out of the process and ensure that you consistently invest. This is particularly helpful if you're just starting out and want to make sure you don't skip a month or fall off track. Automating your investments also helps you take advantage of dollar-cost averaging, which means you're buying more shares when prices are lower and fewer shares when prices are higher. 1. Keep learning and stay informed. Finally, the best way to become a successful investor is to keep learning. The world of investing is always evolving, and new opportunities and tools are constantly emerging. Stay informed about market trends, new investment vehicles, and personal finance strategies to ensure that your investments are working for you. Read books, watch videos, like this one, or follow trusted financial blogs and YouTube channels. The more you learn, the more confident and skilled you'll become as an investor. Don't be afraid to ask questions, seek advice, and always be open to learning. And that's it, your complete guide to getting started with investing. It may seem like a lot at first, but once you break it down, investing is all about setting goals, being patient, and staying consistent. Whether you're looking to build wealth for retirement, save for a big purchase, or just grow your financial security, investing is one of the best ways to achieve your financial goals. If you found this video helpful, don't forget to hit that like button, share it with friends who might also benefit, and subscribe to the channel for more tips on personal finance and investing. Remember, the earlier you start, the better off you'll be. Take the first step today, and you'll be on your way to building your wealth. Thanks for watching, and I'll see you in the next video. Short. Want to build wealth, but don't know where to start? Investing is the key. But how do you begin? First, you need to understand the basics. Stocks, bonds, real estate, mutual funds. Once you get that, it's time to set clear goals. Are you saving for retirement, a big purchase, or long-term growth? But wait, there's more. What's the secret to minimizing risk while maximizing returns? The key is diversification. Want to know the best investment strategies for beginners? Discover how to automate your investments, make them grow, and avoid common mistakes. Curious? Watch the full video to learn how to take control of your financial future.